Good morning, everyone. It's September 30th, Friday morning. It is 8:25. Going to run through the morning charts here and kind of recap what happened yesterday. Fortunately, I wasn't able to get to the computer much other than update on my iPhone, see what's going on more or less. But I'm going to recap everything right here this morning. Yesterday morning, I told everybody to put their protective stops in place, make sure they're in place because the market it is oversold overall, and it could easily rocket and take off to the upside. So we got to make sure we got our stops in place, especially today. Now, if we just take a look at the US dollar index, this is the 4 hour chart, and we're zooming back 1 month here. And what we had here is the long term breakout of there was a kind of a falling wedge or support zone here. It ended up breaking out, having a nice run up. And again, we took our first entry point here, took some off up here, which was a key resistance zone about a day later. And then we saw it continue to pause as it tried to eat through this resistance. And then we got a nice shot quite a bit higher up to a key resistance zone. And we actually gapped strongly up the next day, and we actually took profits up here. Now we've seen it start to get a little bit choppy. It goes up and down, made a new high, and sold off pretty strong. This is usually the sign, the fact that it broke above here is usually a sign that the market is somewhat getting toppy, or the US dollar alone is starting to get toppy. Now we did get a nice pullback down into this support zone, and I pointed this out a couple days ago. Likely to get a nice bounce, and what I was pointing to was we're likely to get a move. I pointed on my report that we'd probably see a move to here, or we see a breakout and a move quite a bit higher to another surge. So right now, as we speak, we just clear the chart. If we just kind of zoom out, way out, quite a while ago back here when we were seeing this falling kind of channel here and support was being held, I pointed out if we break out of this level, we're likely to go to the next key resistance zone. And if I just simply draw that in here, we've got these pivot lows, we've got this pivot high, and that's pretty much right where we surged up earlier this week with a couple not really topping candles or tails, but we can see the price went up and big sellers stepped in, pushed it back down, did it twice. So it does feel as though it's starting to get a little bit toppy, and if we just quickly, we could draw somewhat of a neckline in here, and we've got a possible head and shoulders forming with a very steep neckline, meaning if it breaks this neckline, we're going to see it not only break the trend line and sellers to exit the position and actually get out of the US dollar, but then we've got a pivot low here, we've got another pivot low here, and we've got a pivot low here. So it could easily start to trigger the stops and go into free fall mode and come right back down into probably right through the middle of this noise here. Oops, right through the middle of this noise here, which is a pivot low, pivot high through these tops, a pivot high, and there was a little consolidation and pullback here. We got a pivot low, so we could see the US dollar come screaming right back down, and that would actually put a bottom in the stock market, and we'd see equities and metals continue to move higher. But again, with overseas issues climbing, we're finding more and more money is kind of creeping into the US dollar index as the safe kind of currency and country at the moment. So it continues to hold up. So overall, again, just zooming back in, we're on our way up. Could be forming a right hand shoulder, and I'm going to be probably tightening our stops on our SP position to put it more into the money if the markets reverse on us today or early next week. I'm hoping we're going to see the US dollar continue to stretch up. I'd like to see another surge higher, and then I'd like to see it to try and top out. If I was to just draw this out for you to get a visual, I would like to see the US dollar stretch up again. I like to see it kind of get hammered and come down pretty sharp, and then more or less form some type of a bear flag that kind of slowly kind of forms a grind up, and then eventually we'd probably be looking for a short opportunity, and we'd probably see the stops because there will be a neckline running up here. Eventually we'd see stops get run on a trend line break on these pivot lows, and then I would think we'd probably come somewhere back down to here, which would give us a great opportunity. Shorting positions are extremely powerful simply because you get fear, which is much more powerful than greed. And when everybody's fearful, the market drops much quicker. Usually, you get 6 or 7 up days to 1 down day, so you can kind of figure out how quickly you can make money if you catch a top or a nice bearish pattern. The drop happens very quick and it's much bigger than an up move. So looking forward, if this US dollar continues to rise, we're going to see continued pressure on stocks and commodities. So let's just see what's been happening in commodities this morning with the rising dollar. This morning, you can see overall, this is a crude oil chart. Overall, we've zoomed out a couple months here. If I just zoom in, this morning with that rising dollar, we've actually seen crude oil starting to pull back down. Had a nice recovery bounce yesterday, and it's starting to pull back down with a strengthening dollar. And we'll see how things kind of play out here. If we just zoom out a little bit on it, you can kind of get a feel for what it still looks like. Overall, in my opinion, we've got this, we had this rising wedge, which we ended up shorting right up in here and covering here and here. Overall, we still somewhat have a little pennant forming here, a little pause more or less. And usually this type of pattern usually plays to the downside, and that would, just looking at this price pattern, it looks as though if we do get a breakdown, we'll probably break this previous low and may go into a new low here. So it could be a interesting play here in crude oil, but overall, the fact this pattern here with these little three spikes to new lows, those are a nice reversal pattern on the 4-hour chart. The question is, I think the overall trend of this, if you were to zoom out, the daily chart trend is down. I think it's going to overpower this mini reversal pattern, which played out as we expected to the upside, hitting our target of almost $85 a barrel. But we'll have to see how things play out here. Overall, the trend is still down. Price looks bearish, and this little mini pattern forming here is pointing to lower prices still. Looking at gold, gold continues to trade sideways as expected, and overall it still has a bearish pattern. The trend is down. It has yet to really break any key pivot highs, and we've got the strong volume you can see is obviously selling volume. We did have a nice buying spike here, but overall this is still a bearish pattern within a downtrend, and it looks as though it wants to run a little lower and possibly shake these lows out by piercing it to a new low. Silver is pretty much doing the same as gold. You can see we've more or less just been trading sideways, pausing, and the trend is down. And if you just look at this, we've got pretty tight pattern right into the apex. Usually if something goes to the apex, it's usually going to I find if it goes right into the apex, usually it breaks to the outside or to the downside majority of the time. Doesn't really matter what the trend is. I just find that it's weakness when it usually goes right into the apex. It just means there's still uncertainty. It might chop around a bit, and a lot of times it actually falls to the downside. So looking at this pattern here, if you were to just take a really rough estimate, you've got 28 to about 32, so you got a $4 movement. If we get a break out of here, we could see about a 30 down to a 26 move, which around a $4 move, and that would bring us down to a double bottom. Likely, if it gets down there, it would pierce that low and shake everybody out, and it would probably be a better opportunity to get in. And this is kind of what I've been pointing out for for the last week and a half. You're going to get this big move. We're going to get usually a bounce, and then usually it'll drag itself and go make a new low, and it's that new low that you really want to go long. I'm not a big fan of trying to pick the first bounce for a bottom, because bottom picking can catch you pretty bad, especially in silver. Now taking a look at bonds, just a recap on what's going on with bonds. This is I'm just going to flip to the 4-hour chart. Yeah, the 4-hour charts, similar to what is used for gold and commodity. So we're running on the same time frames. You can see in the last couple months, it's continued to move up. It's starting to get choppy. We had that big blow off top, and we're starting to get a little bit of a bear flag here. But overall, if there's continued issues in Europe, we're going to see bonds continue to grind up. And I'd really rather wait for some big topping pattern to get put in place, other than just a rise in volatility. Rise in volatility doesn't mean there's going to be a top. So we're going to let that play out. I don't want to get involved with TLT or TBT ETFs, which is the inverse, just yet. Zooming out on this picture longer term, you can see where we are. You can see that spike brought us right up to a previous high. You can see what happened right after that. Um, I'd like to see more of this price action. You can see we had a sharp drop and then we had a bounce here, and that's kind of what I'm looking for. We've had the sharp drop. We really haven't had much of the bounce back up. Looking right now, it started to work its way up, but maybe if it goes a little bit higher, it might be an opportunity. But overall, I don't really want to get in front of bonds too much because I think there's still enough fear in the market that we're going to see money move into bonds, especially if we see the stock market take another plunge here. Now looking at the futures chart of the SP 500, yesterday we had a bit of strength in the morning. I'll just yesterday we had a I'll just highlight yesterday and the previous day's price action. High volume is regular trading hours. So this here was Wednesday. This was yesterday, Thursday. And yesterday we saw the market closed the previous day, sorry, right down here. And then the next day it opened right up near the high, right up here. We had this huge gap, and usually a gap to the upside in a downtrend is what happens. Usually in a downtrend, you'll see the market gap higher because the big guys will allow the market to run up through the night, or they'll run it up through the night, and that means it opens the next day at a nice high, usually at a resistance level, and a lot of people get bullish and they start buying, and the big guys are unloading at the premium at this high with all that volume piling into the market, and then eventually the market just collapses again and they continue to sell. So they're actually getting a premium for it and catching a lot of people off guard. So we saw a nice three-wave move down. The part that has me scared is the past couple of sessions. The first one here, we saw a strong bounce into the close. It only happened about 10 minutes before the close, or 20 minutes, meaning it was most likely short covering. People still playing the fades into the close, and it was just short covering. But yesterday we saw really strong volume buying into the close, and you can see it took it from the low of the day right back up to, and moved pretty much up to key resistance here. The fact that we had that big strong volume is telling me that there's some big money starting to actually accumulate a position here. And I just want to point out another thing is through the night in a downtrend, if you look back here on Wednesday, the trend was down during the day. In overnight trading, we saw the prices move up. And that's the sign usually that we're still in a downtrend, and that's likely going to get sold into again. Now the fact that we had a strong move up into the close yesterday, and in overnight trading we're actually seeing a fade back down to those levels. We could see big money step back in down here and buy it back up, and they will have accumulated all this position and a new position this morning at a premium, and it could actually be starting to form a base in the market, and we could see prices actually bottom. So there's we've got some price action showing that there's big guys stepping in. There's still big sellers, but there's also some big guys nibbling away, pushing the market back up. They're not letting it run and break out to new highs or anything, but they are buying up large amounts, just taking it back up to resistance, and they don't want to pay a premium buying, so they just stop once it reaches the level that they're happy with. So we're going to keep an eye on things. But again, overnight trading, we have seen prices drop substantially. They closed right up here yesterday at the close, and in overnight trading this morning we're trading down here. So we're down about a point and a half, 1.5% on the SP 500, and that's it'll move directly in our favor. What I'm thinking is we're probably going to be moving our stops to yesterday's high, which is almost pretty much where we entered the market. And if we get a break of this low, then I'm going to probably be moving our stop either down to yesterday's closing price, or possibly even to one of these pivot lows, so that we can really lock in gains if we see price start to hook and rally up. Well, at least we'll get taken out at a nice profit at these levels, depending on how strong the move is and the price action that rolls over here. If we get a nice breakdown, I'd probably be putting our stop somewhere over here. Anyways, that's it for now, and I'll talk to you guys in a bit. Bye-bye.